Welcome back to Global Lens Macro to Micro. Today, we're exploring an industry where has spent decades, a powerful force shaping the business world behind the scenes, namely private equity, or PE. Once a niche regional strategy, private equity is now a global driver of investment, transformation, and even controversy. So how did we get here, and where is it going next? Let's dive in. Okay, so let's define the term before we go global. Private equity or PE involves investing in private companies by opposition to public companies or listed companies. That's often through buyouts, but also venture capital, with the goal of transforming them for resale at a profit, usually over the course of years. The defining features of LBOs, leverage buyouts, well, it's in the name, leverage. PE firms use borrowed money to fund deals and boost returns. It differs from venture capital. PE focuses on established companies with cash flow, not just startups with potential. But private equity didn't always have international reach. So what has changed? Initially in the 80s, big US buyouts like Wautier and Nabisco brought PE to the mainstream. Then in the 90s and the early 2000s, deregulation in Europe and Asia made foreign markets more accessible. It was supplemented by technology, real-time data, analytics, communications, open doors worldwide. And last but not least, international capital. Pension funds, sovereign wealth funds began pouring into PE for higher returns at large scale. Globalization therefore made PE a key player, not just in Wall Street boardrooms, but in markets from Sao Paulo to Shanghai. What impact is private equity having? Namely, a few things. Corporate restructuring first, turning around underperforming businesses through efficiency and leadership changes. Then, of course, M&A, mergers and acquisition. PE does consolidate industries, think tech, healthcare, manufacturing, even veterinary clinics. Emerging markets then, high growth opportunities in Africa, Southeast Asia, and Latin America do attract private capital. Finally, governance and culture, driving performance-based management, operational discipline, and sometimes controversy are all factors of private equity. The global stage also brings complexity and challenges to the PE market. There are regulatory hurdles. PE needs to navigate a lot of tax codes, labor laws, and compliance across multiple jurisdictions and states. There's a currency risk. Exchange rates can make or break certain deals, especially in emerging markets. Geopolitical tensions, trade wars, sanctions, or regional instability can disrupt operation. Lastly, ethical concern. Some critics say some PE deals chase profits at the expense of jobs or sustainability. So as private equity's influence grows, so does the pressure for transparency and accountability. What's next then? Impact investing, PE that creates both profit and positive social and environmental outcomes. Digital transformation next. AI, big data, machine learning are redefining investment strategies. Global capital in the form of sovereign wealth fund will keep flowing into PE as countries diversify their portfolio. Retail investing, there's more and more family offices and wealthy individuals, but also aggregated investors that pour into the industry. Last but not least, there will be consolidation because of the scale effect in asset management. And lots of PE will consolidate or be consolidated. So the private equity playbook is expanding. It's going digital, it's going global, it's going responsible, and it's consolidated. Let's recap. Private equity has evolved from US boardrooms to be a cornerstone of the global economy. It drives performance, good governance, consolidation, innovation. It restructures companies and increasingly operates across borders. But it must navigate challenges like regulation, ethics, and geopolitical risk to sustain its growth. Thank you for watching. If you like this video, please click the thumbs up and subscribe. If you have a topic that you want me to discuss in my next video, please let me know in the comments. I'll see you next time.